Hi, what's up everyone? This is Darren Ng from Fast Track Property. Today is going to be exciting as I speak to you about whether you should aim towards capital gains or rental income. I remembered a conversation I had recently when a friend of mine was asking me to assist them to draw an actionable plan where he could start his journey to owning multiple properties in Singapore. I smiled and asked him why out of the blue he decided to embark on this. I was actually really curious to find out what changed because as a person, he always considered property investment to be too risky, too expensive, too much commitment, and he rather depended mainly on his personal savings and the occasional investment into the stock market where there was no debt to his name. And his reply to me was that when he spoke to his friends who owns private properties in Singapore, they told him that they are enjoying collecting rentals every month and uses the rental received to live their lifestyle, and he wanted that for himself too. Having heard that, right, I smiled and I told him not to be upset, but his friends are lying to him. Now, why do I say that? And guys, I appreciate you smashing a like button and subscribing to the channel, and also do remember to click on the notification bell so that you will be notified of any new videos that I release. Okay, so alright, so back to the video. Why did I say that his friends are lying to him? Let's take for example, right? If today you buy property worth $1 million, okay, based on the LTV you can get today, you'll be taking on a loan of 750k. And let's assume borrowing at an average of about 2%. I know that it's much lower today, but average of 2% for the next 30 years. Yeah? The installments that he's going to pay, right, is going to be $2,773 a month. Alright? And depending on where you buy, and you could probably rent out your property for about $3,000. Looking at this difference, you'll be like, wow, this is great, right? The difference over here, you're able to get about $227 a month. But honestly, how is $227 a month going to change your life, right? And at the same time, you're forgetting that as the owner of this property, right, you need to pay the maintenance, and the collection of your rental income also adds into your personal income tax. Now, what do I mean by this? If this property maintenance is about $300 a month, right, and assuming that when it adds on the rental receivable into your personal income tax, is about $1,800 a year. Right, it works out to be about $150 a month. This is all cash out. And the next amount you got to think about is your property tax, which will be about 10% of your rental receivable. So about $300 a month. In total, you realize you're looking at a negative, right? This is $750. If you subtract this, it's about $523 a month. So in essence, what does this mean? How is your friend really enjoying the rental income from this investment, right? He is actually coming out additional money of $5 to $3 a month just to maintain this property. Therefore, if you go around seeing your friends or colleagues boasting about their multiple property ownership and enjoying their rental income, it is only possible if two things occur, right? Either it's fully paid, there is no loan to this property, or they took on a much lesser loan, therefore bringing their monthly payment downwards. Otherwise, they are just lying to you. Okay? But anyway, what then about capital gains? For example, you could start off investing into Astoria Park back in 2002, right? And selling it in 2008 for $227,000 in profits. Taking this money and reinvesting it in waterfront waves. Selling it in 2014 for $386,000 in profit, and then taking again all this money, reinvesting into Commonwealth Towers, selling in 2018 and making $341,000. And then again reinvesting this property, these profits, right, into Park Colonial, and today with the latest transactions, this unit is sitting on a potential gains of $150,000. Therefore, after 18 years, the profit has accumulated to a whopping $1.1 million. And this amount is doubled if both husband and wife invested in individual properties. Now, Why is this so amazing? Because it all started with a 1,173 square feet unit bought at 599k 18 years back, with a down payment of only $138,000. That has now transformed into $1.1 million. And guys, this is a 697% ROI. Okay, and the best part is that throughout these 18 years, he paid almost zero in taxes, right, for all the profits gained. Now you might be wondering, why is that so? This is the beauty of real estate investment in Singapore, where you are not taxed on any of your capital appreciation, right? It is yours to keep. Alright, so therefore the real question comes to this: should you go then for capital gains or rental income? Which should be the priority? The answer to this is simple. It depends on your age bracket. This was earlier explained in my video, 4 Seasons of Life. I've included a link in the description below for easy reference if you have not seen it. Alright, so now back to this. If you are then right now in the accumulative phase, ages 26 to 49, I would suggest you to go for capital appreciation. Sell when it's time to, and reinvest it again to another capital potential project, and keep doing this, right, to grow your capital. Alright, so during your consolidation phase, ages 50 to 59, I'll then ask you to use this capital that you have grown and now reinvest into rental income generating projects for passive income. Now, during this period, you have a choice to retire or just take on part-time work to pass the time, correct? And because of that, even if you need to pay personal income tax for this rental, it is on a much lower tax bracket. Is this making sense to you? Now, let's go back to this, right? Does it mean now this unit that the friend bought is a bad investment and should be avoided? Well, my take is this. We go into the rental phase only when we cannot get the appropriate capital gains, right? We are just renting out the unit out to buy time till we're able to cash out, and during that period, we do not want to lose money too. That is why rentability also forms one of the 5 pillars of investing in the fast-track property system. Now, if you look at this carefully, this is what you're going to hear many people say, right, on a daily basis. In fact, losing $523 a month, right? How can this be an investment? Sell it away. It's so risky. Why buy something yet need to keep paying for it, right? You have heard those, and you have to only buy those that gives you positive cash flow. And this is called negative cash flow. Cannot buy a bad investment, right? Sounds familiar? Right. Well, what if I told you this? This property that you're paying $523 a month is generating you 200% returns. Will it amaze you? Alright, if you didn't hear me clearly, your monthly investment of $523 a month, alright, is actually giving you 1060 a month, meaning at the end of the month you have in fact kept, together with 523, a total of $1583 a month in your savings bank account. Alright, now where is this coming from? It is from what I call the unseen passive income, or ghost money, right? From the principal loan that you took, the 750k, that is actually being paid for by your tenant. In a year, this pot will have grown to $19,000, and in 5 years, it will have grown to $95,000. And this is all your money. And again, of course, you want to sell this when the capital returns make sense to unlock your funds to buy yet another unit for capital gains. Therefore, you can clearly see now, guys, that real estate investment can only make sense if you take it as a mid to long-term investment. And it is like mastering the art of growing the bamboo tree. You see, the bamboo grows unlike any other tree. You keep watering and nurturing it every day. But the strange thing is that nothing happens for 5 years. And many people at this point will have abandoned this tree thinking the effort is not worth the reward. But for those who are patient and continue to water and fertilize this tree, in the 5th year, the bamboo tree will break through the ground and grow 80 feet in 6 weeks. And it's like as if you are there to witness this amazing transformation right before your eyes. And it is just like investing in property. This watering and nurturing of 523 a month and getting back 1060 a month is not going to change your life. But in 5 years, a 95k and a capital gain of 150k will. Alright, I hope that this makes sense to you and you enjoyed this video. And if you haven't done so, smash that like button, share this video and bless whomever you think may benefit from it. And remember to subscribe. Speak to you soon.